Come on, everybody. It's early Sunday morning. It's very early Sunday morning. It's May 28th. And while the market is not open on May 29th in observance of Memorial Day here in the US, I'm getting ready for Tuesday. And felt like discussing what happened with the stock options and the stock option straddle situation and how this is going. I can't wait to discuss it because I just can't wait till Tuesday morning because the truth is I mean, wow, this is as close as I've ever come to creating something that really tells you how to make money by trading stock options and straddling them, buying a call and a put, and taking shavings of profitability off of the volatility of a stock. This thing is incredible. It does, it does basically in Microsoft Excel and feeding some information into it. It does enough to create a list where I can just tell you with a high degree of confidence and certainty that when it puts a company up here with a really low ABS ranking like Amazon, it says you can buy Amazon's options that expire next week. There's 4 days of market activity left. Tuesday, Wednesday, Thursday, Friday. They're at $120 a share right now. And for $400, that's a $4 swing. They either have to go down past 116 or they have to go up to 124 or more before Friday. Are they going to do either of those things? There are no certainties in life, but the algorithm says this is the algorithm is saying, I believe that there is a 98.2% chance that they go below 116 or over 124 at some point between now and Friday. I believe that's kind of what this number actually means when it is really low. And the reason why is there's too much volatility and activity to keep them at one strike price forever. So eventually things move, and you're talking about a move that is 3.3% of their value. And on a bad day, when the market goes down and everybody pulls their money out, companies move 3.5%. Like that happens to every company on bad days sometimes. Like this is really one of the most amazing things that I've found doing this is how little a company has to fluctuate for you to make money in this strategy of buying the call and the put. And the more they move, the more money you make. It's insane how it just like they could go way down or way up and you'd make a ton. So it's saying buy Amazon's options for the $400, buy the call and the put at a strike price of like 120. I did that. I did that on Friday because this was showing up at the top of the list on Friday before the end of the day, and I bought it. Kroger, same thing. This is like the second time I've seen them on the list. They're a lot cheaper stock and only $47 a share. Like they're not a huge priced company. And so one of the things I did here as I was preparing this for the week was I decided to remove all companies that are under $40 a share. And the reason why is that when you're looking at making money doing this, nominal money, it's related to how many dollars per share the company moves away from wherever they are. And so a company that is like $1,000 a share is a much more interesting purchase than a company that's $30 a share, because the $30 share company can only go down 30 at the most. The $1,000 share company can go down 1,000. Put it that way. And they can both go up infinitely, or at least approaching infinity. The point is that basically you want to own companies that are higher share price if you're nominally thinking about making money buying one contract on the company, which is I like to try out companies and just buy one contract because it serves my purpose of knowing whether or not they're a good investment, regardless of how expensive it is. So the point is looking through this list. This list hits a lot of really good ones. IBM was great this week. Medtronic I owned and I sold on Friday. I made money already, profited in one day. Cisco I sold on Friday, one of them, and profited there. I haven't bought Apple yet, but I probably will because they're showing up on this list and they're apparently under $400 and they're at $175 a share. Are they going to move $3.75 between now and Friday? Probably yes. think they would, right? That's what the algorithm says. It's a really good rating. So anyway, like I just want to talk a little more abstractly about how this works and how easy it is when you have it to look at in this format. So as this pops up, I mean, take it at face value and do everything under 5% because I've said those are the best. And eBay is a $44 share. Cheap, cheap, cheap here. Kroger, Cisco, eBay, super cheap, but they're still on there. So it says you're supposed to put aside $1,600 supposedly and buy this stuff. And if you do that other than the cheapies, I almost want to get rid of everything under 50. Oh man, do I want to do that? I'm thinking yes. And the reason why is it's probably not worth your time. Oh, I shouldn't say that. I'm going to leave them in there for now, but man, I'm really contemplating it because I don't want to say put your money to this. You'd be better off not putting your money in eBay and putting it into something like AMD. So let me get to where I'm going to develop in this video a little bit more. So instead of just looking by ABS rank, which is an important number, it is skewed to lower cost because lower cost means lower risk. And that's important because you still have an upside of a company moving many dollars a share, even if they're not a very high share price. And that would result in you making hundreds and hundreds of dollars on one option. So if you could make $500 on an option that cost you, 283 like IBM, then why spend 700 to do the same thing with a company that doesn't move apparently as much and costs more than 283? But when it gets down to these really cheapies, they're never going to move like, I don't know. I'm thinking they're not worth it, but we'll see. So let's look at the largest options out there. $11,000, $10,000. Companies that have strike prices and share prices in the thousands, right? So they're moving $100 in a week or more. So that's why their options are costing $10,000 or more, right? This is out of my range, but maybe not forever. It's out of my range right now for testing because no way am I going to do that. But it has also shown immense profit in some instances. Like AutoZone went down by $160 a share, even though they only moved $1 on Friday. They went down $160 a share on like Tuesday or Wednesday or Thursday, one of those days. And so you would have made all your money back and then some, made like $4,000 or $5,000 or something on that one day because they were like $12,000 options or something. So that's something to look at in terms of spending bigger money. Now, what you really want to find is you want to find boom numbers, both positive and negative, okay, that have lower cost, higher share price, and good ABS rank is really what you want. And I guess the way to look for that is, you're looking for green, right? So like Kroger shows up on here, but their share price is red. It's the problem. So they're not a very expensive company, obviously. Where do we see one where the current day movement, like what is this? This is $700 though. If you want to see a greener price, like the price will still be green at like 300 something. No, Merck's $111 share company, 321, 10%, something like this. Like Merck's probably a pretty good pick. Well, we're looking at the negatives for a second. Let's go back to the positives. It's all going to be semiconductors though. So we want this to be largest to smallest. So this is the companies that went up the most to make the most money. And you can see that Marvel on here is not as expensive as it should be because they're only $65 a share, but they, they might start, they're not going to turn into AMD or anything, but they might start, continue to go up. Stuff like Micron, they moved around because of semiconductors. Qualcomm did the same thing, moved more than they needed to just on Friday to make money. Like you crush profit on Friday. American Express for some reason. I I don't own this. I haven't looked into them, but they seem interesting. Yeah, they do. They move $6. Right? Yeah, see, this is a possibility. American Express, Netflix. I've heard good things about their volatility and their $1,600 options. Though it's the problem. So I mean, you buy Netflix, you are in need of a $16 change. They moved $19 today, so no problem. Did they do it? The algorithm says probably. They have a 14% ABS rank, but the ABS rank gets influenced because there's a $16 range where you're going to lose the potential of a lot of money if Netflix settles down and doesn't move on a Thursday and Friday or something. That can happen. So if that does happen, you got a lot more at risk. That's why I say it's expensive, regardless of whatever your budget is. That's an expensive number when it comes to picking a strike price to straddle. You want this number to never have to deviate a lot so that you can pay not a lot for that muffler, right? That's why it's so helpful because Micron could move $20 a share and they don't still only cost you $278. Why should you have to pay $1,600 to try to make Netflix move $20 a share? That's the whole point of this. Is you're looking for deals when it comes to cost of options, and that's what the ABS rank is really supposed to be doing. Because as you can see, it really puts Amazon way ahead of, not that far ahead of American Express. Actually, American Express is looking really good to me now. I'm probably going to pick one up early next week. Netflix still way too expensive. I don't want to mess with that yet, but we'll see in the future. And here's another semiconductor company. I mean, what is going to happen with semiconductors all week long? Is it going to be more pumping money into that industry? Or, I mean, the AI news isn't going to stop. I don't know if there's a chip shortage, but processing time and cost and stuff like this is an ongoing thing. This is what leads us into the robot revolution is companies that are making chips. So I think that the rally has a lot of sustained features to it, even though, of course, there'll be profit-taking days, and so stuff always going to go up in a jagged fashion. But I think that the arching direction continues to be up for a reason. So AMD shows up here at 660 and 10%. They moved that today. I owned it. I still own one of them. I sold it today at a pure profit just because I was like, how can I not make just $110 on them in one day and guarantee myself profit and then sit back and watch my put? I was like, I can't not do that, even though they're probably going to keep going up and I probably threw away hundreds and hundreds of dollars that they'll be up more next week. I just look at it as guarantee yourself a profit, sit back and then reinvest in something else. So basically what I did with them is I bought them for about $640 is what I got, $640 for their options. Got them on Thursday, I think. And then they went straight up today. And I could sell one of them, my call, for $750. So I was like, all right, I'll just sell it. Bought it for $640, sell it for $750 the next day. And I still have the put at like 120 or something. 120. So if they drop a bunch next week because people take profits, then all of a sudden that put will be worth something. I'll make more than just the $110. Like I'll make plus whatever that's going to be. So that's the way I decided to play this because it's just free money at that point. Like you already sold one option, profited on the transaction. So like you're just sitting back and watching the other option that you still have and just determine, you can hold it all the way till next Friday and maybe they drop off the map or something. And there's a big market pullback and you make a ton of money. It's just an amazing, it is the greatest stock option trading strategy I have ever come up with. And I'm glad that it has a name called the Straddle. Of course, I didn't think I invented buying a call and a put on the same company. Like But in order to know who to play in this strategy is really everything. And when you know who to play, man, you can't lose. You could not lose with a company like AMD last week or the week before or the week before that. They turned their options keep getting more expensive. They were probably only like four or 500 at most the week before, because they're just all over the place. They were like an $80 a share stock like less than a month ago, and now they're at 127, like out of control because of the investment from us. So they're continuing. They're a great one to do, and I'm gonna do them again. Although I already profited on them, so I don't know what I'm gonna do, but I'm gonna sit back and watch, and I'll probably wait till some down days out of them before I buy in again. Given the position I have left on them as a residual of the option I already profited on Friday. It's just so easy to make money doing this, and it's cool. I mean, what I'll leave you with here is why I'm doing a video early on Sunday about the stock market doesn't open until Tuesday. Is I think that one of the things we all have to do is we have to figure out how we're going to operate as a society when robotics, like AI, robot, like machines doing stuff for us at a different level than we thought was really possible, to the point where a lot of our problems are going to be solved because things get so much less expensive when you have a robot doing something for you instead of a person. But then there's the problem of the person doesn't have a job anymore and the person doesn't get paid anymore. And everyone's scared about losing the security of their job and their income. So how do we work both of those sides at the same time and make them work for each other? Because instead of thinking it's going to be doom and gloom, I'm like, well, there are certain things we need to live, like food, shelter, transportation. There are things we need to live, right? Now, robots are going to make them less expensive to buy, and there's going to be more that we're going to be able to do with them because they're going to be made by robots. All kinds of things are going to happen. So the point is that we need to be able to at least make money distributed around better than we are doing right now. And so when you approach that problem of we'll call it income lopsidedness, right? Like, so like one person shouldn't have $100 billion while an entire like 5 billion people have a combined like $3 billion or something. Like there's this really wide disparity on actual numbers about how much people have in terms of wealth versus how much other people have in terms of wealth, whether you rent or you own, whether you're homeless in a van or whether you have 15 different palatial estates all over the world or whatever. There's things that you own and your value goes into it, right? Well, there's real estate, but then there's also securities and stocks. And one thing you'll notice is that the wealthiest people in the world are heavily invested in the stock market. And many of the wealthiest people in the world do nothing but manipulate the stock market and play the stock market all the time, as that is where the majority of their wealth is centralized. So much so that, I've got this pivot table here, which tells us the market cap of every company we have on this list. And it's more than 3 trillion. I got something. Oh yeah, that's 3 trillion is just semiconductors. That's what I was looking at. It's just semiconductors. The entire market's $62 trillion, right? That's more than even the national debt here in America on that debt ceiling we're trying to raise. I think we're raising to like 34, 37, something like that trillion. Well, there's all this money in market cap that comprises global wealth, one could say. So there is a number on here of the 67 trillion. It's interesting to think about. I haven't thought about tracking what its total is over time, because its total is just an inclusion of public companies. It's not even including private companies. Private companies have their own wealth and are not listed on here at all. This is just public wealth. However, most of the fortune of the wealthiest people in the world comprises a significant amount of public company ownership. So there's probably not $62 trillion worth of private companies out there. I don't know that for a fact, but I would gander that the number of public companies in that 60 something trillion dollars is much, much larger than the number of all private companies, most likely, especially where you can profit off of buying and selling their shares. Point of all this long-windedness is that if we need to be finding ways to get income to those who want it, to those who need it, to a better way, well, you've got to get it from where it is, right? So what I'm seeing here with the straddle strategy in investing in stocks is that you have a way of scraping the volatility out of the marketplace by cunningly buying inexpensive things that are absolutely going to be more volatile than you need them to be for you to guarantee a profit. And you can just keep scraping away at very, very low risk profit that sometimes has a really, really high yield and benefit if things move a lot. And it's a really, really, really difficult to lose. And you're definitely making money overall. I'm making money overall. I'm going to get some more numbers on this over the next. I need to do more than 3 weeks of trials to give you real numbers. So I have so much stuff open that expires. I need to actually do this for a while to be able to tell you what to guarantee, because some days I would say, oh my God, you're going to be making 25% a day. And then other times I'm going to be like, oh, you might lose 25 to 50% on a Friday sometimes. Or like, I don't actually know the answer to that, but I do know that you're going to make a ton, a ton overall listening to this advice and doing that. So much so that, I want to make a prediction based on what I'm seeing. It's not even June, it's almost June. By the end of the year, I 100% guarantee I will double my money that I have in there. That's a no-brainer. Question is, how many multiples of the money are you going to make in a year doing this if you do this on a weekly strategy? I think the answer is, well, what I've seen is that it's actually highly, highly reasonable to make 25% a week. So if you do the math out on that, that's a lot of money. Somewhere in the neighborhood of like, if you invested $5,000, you could probably turn it into $100,000 by the end of the year. I think that's actually a very realistic expectation. Reason being, as you invest more and you just pick on this down the list, you are going to do well. If you have 5,000 in there, and you make 25% in the first week, you made 1,000. So then you have 6. Then you make another 1,250. Then you have 7,250. Then you make like 1,500 or something. And you got 9, 12. Yeah, now you could get up to 100. That would actually be really, really good to go, 20 to 1 on your money in 6 months. But it's very, very possible. Really possible. So I'm going to try to set that as a goal, because that's kind of what I started with. But there's going to be more money that's going to go in here for different reasons. And when you open up more money for this, then all of a sudden you can start to consider these really expensive ones. And there might be certain reasons to consider, because I remember this was one of those that actually had a really high ranking when I was originally going over First Citizens. They took a huge jump up. They're at what? They're at 1273. They were at like 800 or something. They bought another company. That's what happened. I think they bought Silicon Valley Bank, maybe. And there was a whole question about what assets would be worth and all kinds of stuff. And something about this has been positive for them because they've moved up like $300 a share. And that's $30,000 in option value. So even though you're paying $11,000 for this, depending on how long your option was, you could have made $20,000 in the last couple months doing that. So it's an interesting question that I'll be analyzing. It's pretty awesome stuff. It's pretty awesome stuff. That's all I can say. Is just, I'm amazed. I hope that we can all, like, I would love it if I built this algorithm and I was like, all right, We have this algorithm automatically looking up for the best companies. It's making purchases, it's querying bid-ask prices so that it's giving us the most current detail about where the best deals are at every given minute when the market is open, right? I just want to be able to press refresh on this thing. Companies are going to change here slightly because they're going to have moved different amounts during the day. I just want it to pop up, be like, buy it. Okay, you're supposed to buy Amazon right now. Go buy it. Biz buys it. At the end of the day, it's like, oh, guess what? Your Amazon can be sold for a 12% profit today, Ken. Would you like to do that? I'll be like, sure. and that would be my day. And it wouldn't just be Amazon, it would be all the companies it's saying, and it just ends up resulting in you making money. So the point of all that was, why not, if you're one who wants to seek out ways to make money out of information, this seems like a really excellent way to do it in the place where all the money is, which is in the stock market. I would imagine that the reason why this works is that you're not playing against the house here. What you're doing is you're finding value in the cost of a contract because volatility is probably going to be greater than both people on both sides think. Like, people don't think something's going to move all that much, yet in reality it does all the time, and it's obvious mathematically. So if there's obvious mathematical ways to take advantage of this volatility and shave off profit, all you have to do is do it and you profit. So, I mean, real quick rundown of companies, own it, looking good. Own it, looking fine. Don't own it yet. Would like to own Apple. Owned Cisco, made money. Owned Medtronic this week, sold it, made money. Owned IBM this week, sold it, made money. Should have made more. eBay, owned it, lost money this week. I lost money on them. There was one point where I could have sold them for a really, really tiny profit on like Tuesday, and I didn't. So it's kind of my fault, but they also never migrated back. They're a lower share company, didn't make money on them. So I'll probably, when you don't make money on something that this list has, then you suck. But because usually it does well, but this one wasn't able to do it. It makes me want to remove companies with a share price under 50. It's really what it wants me to do, but I'm not going to do that. STX, don't own it. Marvel, owned it on Friday and made money in one day. I made enough profit. Unbelievable. American Express, gonna buy it. PayPal, owned it and didn't do great when I owned it. They're kind of a lower share price company. Meta, I'm going to look into, but it's too expensive. Qualcomm, no. Charles Schwab, no. Taiwan Semiconductor, I own it. They need to move more next week. We'll see if they do. Adobe, thinking about it, but they're expensive. Texas Instruments, haven't looked into it. No. AMD is awesome. Made money on them on Friday. Probably going to obviously buy them again next week, because why wouldn't you? There are just things on here that just win all the time. MGM I own, hasn't gone anywhere yet. Tesla I don't own. Super expensive. Shopify is another weird one, although they are still kind of expensive for a $60 share company. Roblox I lost money on this week, actually. Found a way to lose money on them. That's rare though, but I did lose money on them this week. JP Morgan, I lost money on them this week. Didn't sell when I should have on Thursday. Target I made money on. Google 460, huh? Yeah, the big names like Google and Apple and Facebook, they seem like good picks. They seem like they move enough to make it work. T-Mobile's been an excellent one. They've been a really, really good one. See how they keep going. I'd like to try Abbott Labs. Tapestry I made money on a couple weeks ago, but didn't take them this week. Microsoft. Man, Microsoft's at 332. Boy, did I blow extra money by selling them too early. So Microsoft is, they're making a play for search with Bing AI. And they're making a case at $332 a share. It doesn't matter. They have so many shares. You know what's funny about Microsoft is when you look, they have issued so many shares. that you're like, how on earth can they be worth $300 a share? Like, I remember seeing another list about how many shares they have authorized out. It's just like trillions. It's not trillions, but it's billions. And it's like, you wouldn't think that they'd be able to move that much, that they shouldn't be able to move $7 in a day, but they do. Like, and they're in it to win it. So I mean, the cost of that option, it's $1,000. Wow. Yeah. I mean, the market has responded to this by making these $1,000 options. Microsoft did not used to be $1,000 for a week option. I probably need to update that. That's probably really changed. It's actually probably cheaper, but maybe not. I don't know. I'll say I'll leave it up there for now. It's expensive, but like, man, you're like, it's a train. You can get on it. Micron. Somehow I lost money on Micron, even though they moved more than they needed to on Friday. I sold too early. Lesson of the day: do not sell your option when it's down a lot of money and it's not yet Friday. Wait until the last day, because you might have a day like this. You might win. Starbucks, we need you to go down because you were the pick of the day on Wednesday. We'll see if they continue to go down. Oracle made money on them both ways last week. They were awesome. Anheuser-Busch finally went up 28 cents because now Target is taking all the trans heat. All right. Yeah, it's late. All right, guys, that's about it. I just want to let you know this thing is incredible, and I'm doing my part to have this thing make money for human beings. So we'll see if just buying these companies and paying attention to their prices as they fluctuate is going to be enough to make consistent profits. Because as all I can see it doing right now is just winning like 8 out of every 10 companies flat out winning. Some of them winning by hundreds and hundreds of dollars, going dollars away from where you need them to. So good luck, everyone. Hope you enjoy the podcast. May all your trades be volatile. Make money any way you can so that we can increase the wealth of this world and increase standard of living everywhere. And I don't want to see spread the wealth around here, but increases in wealth that should affect everybody positively. If everyone can just get into something and get into the market and make money, because that's where all the money is. Like, I'm almost want to say that it's almost impossible to make a fortune without having your hand in the markets, the open exchanges of like the NYSE and the NASDAQ or whatever market it is, that it's basically not even possible to do it all privately. At a massive, or I shouldn't say that, it's extremely difficult to make it completely privately, not in this environment, because this is where all the lending and all the capital is. Like, where is the money? The money is, anybody who here is a billionaire, super rich person on the Forbes list or whatever, and they're worth tens or hundreds of billions of dollars. The amount of their money that is in some way related to probably a public company value, sometimes private, but it's much more common that it's a public company, like that those people have that money as equity and stock options in companies. You want to get your hand in that, you have to get into the stock option market because that's where the money is. And if you go there and you play it right, you see how easy it is to have the market make money for you simply by going up and down. It reminds me of there's like a pump thing that you can like put in the ocean, and when the water in the ocean, the tides roll in, it moves the pump up and down, and the pump thing can make electricity through this wave motion that it's harnessing essentially. You can think about this stock option strategy as you are, instead of gathering energy from the market volatility waves coming at you, you're grabbing slivers of profits every time it does that. And every time the crest or the trough of the wave happens, you're kind of told to sell and make some money and guarantee profit, and then hope that the wave goes back in the other direction so you can sell the other thing for extra money. Well, as long as the wave gets enough energy coming in, then you always have a chance to make money. And that's what the cost of the options are set at. And so we're just finding the best ones according to the order. And that, like, it's really difficult to lose. So difficult. Like, really abnormal stuff has to happen. And it's not only that, like, things don't just have to go up, like they go down and you win. So it's like all of a sudden everyone has to like stop trading your stock completely, or it needs to go down a tiny bit one day and only up a tiny bit the next day, and never do anything during the day either, because you can make the sale during the day. You don't have to wait till the close. It is so difficult to lose money doing this. So tough. I'm going to make the bold statement that companies under ABS 5%, whenever we've done this, that at least 3 out of 4 companies reach some level of profitability during the week for a weekly scale. I'm not even going more than a week. I'm just going 1 week. That I think it's about 8 out of 10, actually. I think it's about 8 out of 10, honestly. We'll know more the more weeks we go through this. But I do want to make the statement that it's 3 out of 4. Like when I give you companies, 3 out of 4 of them hit a profitable range throughout the week. I think that's a pretty darn accurate statement. And not on the first day we're talking about it, but talking about after the first day, because you're telling you to buy it after the time I'm showing it. So this wouldn't count. Amazon hasn't made it yet because we're buying the option after today, after this already happened, even though they moved enough today to secure it. We have to talk about after today. But just looking at the ones that I have recommended in previous weeks, that's what it's felt like is about 8 out of 10. And maybe 7. So we'll call it 75%. That 3 out of every 4 I'm going to give you. So which 4 am I giving you to buy on Monday? I'm saying Amazon. I'm saying Kroger. I guess I'm saying Apple and Cisco. Actually, I'm saying all these. Apple, Cisco, Medtronic, IBM, Amazon. I know I keep telling everybody to do IBM. IBM keeps making money. I would not recommend eBay, but don't listen to me. They're also low share price. If you want to do one where you're spending more money and you have a higher share price, let's say that the share price of the company has to be more than $100. In that sense, there's 3 of them that are under 5%, but there's more of them that are under 10%, and that's these guys. So, and AMD should be on there for sure. Yeah. Anyway, I just wanted to point this out. This is like money-making algorithm. All right. So good luck, everyone. May all your trades be volatile. May everything be profitable, and may the world be a better place that we all grow into and learn how to evolve in together as the robots take over and try to make everything all better for us. Because that's why we built them. We built them to help solve our problems for us. So hopefully they will.